I spoke with several CEOs this week about how consumer spending in Q4, whether it's good or bad, is going to impact enterprise tech growth. Here are insights on that and inflation from the CEOs of Informatica and Bill.com.
You know, I'm an enterprise, so I look at enterprise, but we also track consumer because we want to know where the pulse is. I'd say surprisingly, the American consumer has held pretty strong, surprisingly. I mean, with all this inflation going up, we haven't seen let up in air travel, we haven't seen let up in vacation travel. I feel like it'll be relatively okay. There is definitely caution. There is definitely a sense of moderation, but I don't see panic.
Well, what we said on our guidance was that we started to see the growth rate and the spend on the larger customers slowing down. It was still growing, it's still year-over-year growth, and it was great. But we included that and factored that into the guidance that we have. So what we're seeing is larger customers are probably thinking about this more than smaller businesses. And as a reminder, the vast majority of our customers are small businesses. And the way we think about it is, it's kind of like, hey, if you're a large business, that aircraft carrier ship, it takes a long time to get ready for whatever storm is coming, you got to steer. But SMBs, they're like little jet skis, right? They can turn on a dime.
Deirdre, it's interesting, Amit Walia from Informatica sort of echoing what you heard from Brian Chesky earlier about sort of watching the travel trends as one of the indicators of the health of the consumer, but also interesting that larger companies, their spend is slowing down. It seems like they're worried about taking on cost commitments that they're not going to be able to monetize, whether that's inventories, contracts. We've talked about move to consumption-based pricing and also labor.
Yeah. Amid more scrutiny, right? That's what nearly every enterprise tech company is dealing with in terms of the shift to services from goods. Will be interesting this holiday season. Deloitte out with some forecasts already. E-commerce sales, Carl forecast to grow 13.5%, and that would actually be a bigger increase than last year, which was around 8%. We'll see how that shapes up. It's still early to make these kinds of predictions.
Yeah, MasterCard had their spending pulse earlier in the week, still looking for pretty healthy numbers vis-a-vis last year. As we've said, John, a couple of times, just because sales slow down doesn't mean that the customer is financially stressed. In some cases, they just feel they had enough of one thing and they're going to shift their spending to another.
Yeah, we're going to get some more insight tomorrow from the CEOs of Nutanix and MongoDB. Interestingly, they told me different things about how they're seeing growth and demand for growth from enterprise customer shift.
Great. That's great color, John. Pretty interesting. As we go to break, take a look at some of the names continuing to move lower following yesterday's sell-off. As we keep our eye on the NDX, there's rails at the top, obviously, as we got some downgrades and continued worries about a rail strike. We're back in a few.